Hey guys, and welcome back to a new trade recap today from the accumulation zone. Today is Monday, the 21st of November, and today I traded the London Killzone. I only watched the S&P 500 E-mini futures chart because I was completely full with coding work, so I only had the S&P 500 E-mini futures chart on a 5-minute time frame open on my second monitor to basically watch it and wait for the stochastic RSI to cross over bearish, because we've been sitting here in this Asian session range right here. We formed a double top pattern here right around the Asian session high, and on US 30 for example we consolidated within this range. Luckily on S&P 500 we broke the low of the Asian session a couple times. So basically all I did was waiting for my alert to trigger that the stochastic RSI is now in the overbought territory. So basically, because I saw, okay, London open up, price is below the 144 EMA and it is below the VWAP, I'm looking for shorts. Very simple. I set the alert, went back to my coding work, and I got this alert triggered, I think somewhere right here, and then I actively watched the chart for 15-20 minutes until I get this bearish stochastic RSI crossover confirmation with a beautiful bearish engulfing candlestick. I placed my stop loss right above this high of the engulfing candlestick, not higher or anything. I really wanted to just have a 1-bar stop in case this bearish engulfing candle is being engulfed bullish. I want to be out of the trade no matter what. So I had a 12-tick stop loss, or a 3-point stop loss, looking for a simple 2-to-1 risk-reward ratio, which was hit rather quickly. And in the meantime, I closed TradingView again and I went back to my coding work. So very simple, 2% profit right here at the beginning of the London session. The second entry, because we were still rather short, we pulled back into the VWAP and the EMA, the 144 EMA. And again, I set my alert for a overbought stochastic RSI, and eventually I got this alert, so I watched the chart actively again and I waited for the crossover confirmation, which I got right here on this bearish engulfing candle. Prior to that, we touched the 144 EMA, we engulfed bearish, we had a little pin bar being formed here, or an inverted hammer, and I entered short here right on this close, with the stop loss at the high of this inverted hammer, basically at the high of the London session, now with hindsight, and also was targeting a 2-to-1 risk reward. It got pretty close to my stop loss right here, but it didn't stop me out, very lucky, and it hit my take profit after 5, 10, 15, 20, 30 minutes roughly. And I was done for the day. We got another bearish crossover right on this candle, but we did not pull back all the way back to the VWAP or the 144 EMA. So what you really want to see is a breakout structure like this, a pullback into this area. Like we got the pullback here and like here. We didn't get it really here because we already got the signal on this candle here. We sort of got it here. That's most form of a consolidation, breaking down bearish, but that's not inside the kill zone anymore. And we already had 2 winning trades with a total net profit of 4%. So we can simply say, after 2 winning trades with 2% profit with a 2-to-1 risk reward, done for the day. Alright guys, let's continue with the next trade recap. We had, from the price action we had today on Monday the 21st of November on USD JPY, also on a 5-minute chart. Little disclaimer here, I did not trade USD JPY today. I only focused on the S&P 500 futures contract because I had lots of things to do. Otherwise I maybe would have considered looking at more charts, but I was already super busy getting all the codes finished for all the community members who asked me to code a private indicator. So I had lots of things to do this morning and also over the whole weekend. So I decided to only stick with one chart for this morning. And afterwards, for a little bit of a refreshment, I looked at the USD JPY chart. I used the replay feature and see what I would have done if I would have looked at USD JPY today. And during the London Killzone, we had a beautiful bullish move to the upside. Very beautiful move. So basically what we had is we broke through the Asian session high quite massively, and then we consolidated at the beginning of the London session. We've been above the 144 EMA and the VWAP. So on the first candle here, on this first bullish engulfing, we did not get the crossover confirmation yet. We had to wait for one more candle, which was right here. And now it's really up to the trader. So for example, if you would have placed your stop loss right on the low of this candle for a total stop loss of 9.4 pips right here, you would have been stopped out right here 5 minutes after 2:30. So at 2:35 you would have been stopped out with the low of this candle. What you could have done to avoid it, placing your stop loss on the VWAP, same as here. But for this trade, I placed my stop loss, I think at 10 pips, and I got stopped out in replay mode, so I did not trade this live this time. But afterwards I saw this double pattern forming basically, and we got another new bullish stochastic RSI crossover. The Scalper Pro is still bullish, so I entered again on this candle, this time because of the mistake I made earlier. And we are also 10 minutes away from the London Open, the London Equity Open. So this time I placed my stop loss right on the VWAP, because even if we get a wick to the downside, I'm not getting stopped out again. So I placed my stop loss on the VWAP, and then I would have taken profit at a basic 2-to-1 risk reward ratio, but you could also trail this thing to the upside by simply taking profit at a 2-to-1 risk reward, moving your stop loss to break even, so you're not risking money anymore. And then you take partials at 3-to-1, you take partials at 4-to-1, and you can simply trail it up. And if you, for example, reach 3-to-1, you can move your stop loss from break even to a 1-to-1 risk reward ratio. And if you hit 4-to-1, you can place your stop loss on the old 2-to-1 risk reward ratio to secure your profits, and you can keep a trailing stop loss basically with you. So after this little double bottom here at the beginning of the London session, we had a massive move to the upside for the next total hour. So here's the 4 a.m. New York local time candle close, after which we got a massive bullish candle right at 4:05. That's a 5-minute candle, and we got a new stock RSI crossover on the 5-minute chart here, and it's below the 50 level, so it's a valid entry. But it is a risky entry because it's 10 minutes. The entry is 10 minutes after the hourly open at 4 a.m. So they might just want to trap hourly traders into a long trap to reverse it back down. But I tried it because I was testing how the signals today would have played out, and we're still inside the London Killzone. So I entered right here and set my stop loss at the 50% level of this bullish candle right here. I did not want to have a stop loss of 27 pips, so I decided to go for the 50% mark on this massive bullish candle, which was roughly a 20 pip stop loss, looking for a simple 2-to-1 risk reward ratio, and still would have been hit within this London Killzone. Very nice setups today here in general on USD JPY, beautiful bullish trend, and also on ES here, beautiful pullbacks back into the EMA and VWAP area here, giving us our bearish crossover and hitting a beautiful 2-to-1 2 times. Of course, those setups don't look as nice and clean as the ones on USD JPY, but I decided today to trade the S&P 500 futures contract because I have so many things to code right now. And yeah, I think that's it for today's trade recap. And yeah, take care guys, and make sure you subscribe to the YouTube channel if you want to see more trade recaps, and also make sure to hit the like button, and I will see you in the next video. Take care guys, and safe trading.